So we are trending in a direction that is going to take prices up much higher than they are right now. In other words, we just hit the boom in February. I want to show you, and I'm going to give you some of this stuff so you can see it as well, okay? So these are some things that I had my staff working on that I want you to see here with regards to a forecast for 2021, okay? So this is me floating around here in the yellow dot, and we're looking at annual home sales, okay? So if we follow from 1990, if we follow the total annual single family home sales in number of millions, we start at 3 million in the 90s, and it was a very slow slog through the 90s. But then we moved into 2000, and boom, from 2000 to 2005, we saw one of the sharpest inclines that we called in total sales volume, okay? So we got up to a point where we got up to 6.2 million in sales, okay? And that is and remember, that's 6.2 million in sales volume. We are agents. We get paid as a percentage of sales volume. So that means commissions are just going up too. Okay? Throughout this entire time, from 2003 all the way to 2005, if you didn't practice back then, you are a rookie right now. Does that make sense? You haven't completed the cycle yet. Because it felt like there were absolutely no listings and there was no inventory. But you can see the proofs in the pudding. There has never been more listings than there was back then. The point of the matter is the buyer demand was so high, they were selling like lightning. We're seeing the same thing here now, okay? So what we've seen since that big correction, and then a pullback. Now remember, this is sales volume. This is not prices. I'll show you that in a minute. Sales volume has been creeping back up. And right now, I wish I could draw this out a little bit, but it actually is up to about here now. We're up about 5.7, 5.8 in the first quarter of 2021. It is picking up speed, and you can feel it. We have never had in this country, let alone Central and Southern California, more listings hit the market in January and February. It doesn't feel like it because they're all gone in a second with 20 offers on them. Make sense? When you start getting this feeling, it's the same one we got right here. Make sense? Because, and I'll show you, every economic indicator points to we're going to hit another peak here. This is when flippers stop buying low and selling high. And so if you've never flipped in this market, then you're a rookie flipper. This is when you buy high and sell high, if you want to keep flipping, because you don't even have to fix houses up. In fact, in this market, flippers didn't buy houses they fixed up. They just bought houses and held them for 6 months and put them up for sale again. Put some lipstick on them and moved on. Make sense? You're going to start to see that again. It's going to be slow because most of the flippers out there that are big flippers that I know are ghetto dumpster divers that want to fix them up and talk about how great they are at construction. But they're not market people. Market people are going to see, oh my gosh, just buy everything you can. Don't waste time fixing up houses. Go out and buy 40 houses and just sit. Because that takes time too. Make sense? But you got to believe what's happening. And it is happening. I'll tell you right now, we just have far too much money in this country. I mean, we printed, what was it, 8 trillion last year? And we've got a commitment for another 8 trillion given out to the public. Everybody I know is rich right now. Everybody's got money. Thank you, coronavirus. Thank you, government stimulus, because we've got lots of money flowing around right now. So what you're seeing is more listings hitting the market than last year, than the year before, since all the way back to 2006. We have more listings right now. Kind of crazy. So it's important that we keep that in perspective. This is not a difficulty. This is the hottest market you could have. And it's coming. You've got 2 years to pick up as much as you can because it's never going to be easier than right now. Okay? So let me show you more proof. And don't worry, I'm going to give you all these slides so you can share them all over the place and tag me and thank me publicly. I know that's what you're dying to do. So look at our housing inventory. Very similar years we're worried about. We talked about the housing boom in 2004 and 2005. We were down to 4.3 inventory. That was that steep increase I was showing you. And it's all about supply and demand, guys. And even in 2006, we didn't catch wind. And all of a sudden, that's when it started slowing and we had lots. And can you imagine 10.4 months of inventory? Can you imagine what that would feel like to have listings just sitting there? And it's been nothing. I mean, if you got your license and started practicing after 2008, you've had nothing but a seller's market. You've had the best market in the history of the United States. It has just, prices have just gone up. I've never seen anything like that for 12 years. That steep. Because inventory's been dropping. Look where we were last year. Look where we were the year before. All of those years were better than the housing boom. Less supply means prices go up. And remember, nothing trumps supply and demand. I don't care about elections, didn't do a thing. I don't care about interest rates, hasn't done a thing, nor will it ever. Not if we have low supply. That trumps demand even. We've never had higher demand. This country is rich. The only people in this country that are hurting are people that couldn't buy a house anyway. The rich get richer and the poor have gotten poorer. That is what it is. Otherwise, the stock market, the Dow Jones, everything is through the roof right now. Highest levels they've ever been at. People are loaded. They're investing in things. They're selling houses. They're making money. I mean, you can, any house you sell, you make money right now. In fact, I mean, if I'm a seller, I don't fix one thing and it's back on the market in 3 months at a higher price. Welcome to 2004 and 2005. You're better just to sit on them, even to pay a loan. You're better just to wait. Crazy times. Crazy times. So this is setting up, and it's not getting any better. This is likely going lower because we're not building houses fast enough. Coronavirus actually stopped supply, so we can't even build. See that? So we are trending in a direction that is going to take prices up much higher than they are right now. In other words, we just hit the boom in February, and it's going to go for at least a couple years, could be more. If the government keeps pledging on printing more money, and now we have a Democratic executive government, and we have Democrat control of the House and the Senate, and they have all pledged to keep printing money. For right or wrong, I don't care. Everybody says that's wrong because that's going to create outrageous inflation for our grandkids and our children. The dollar won't be worth anything. Could be. But what's the word for inflation in real estate? Anybody know what that is? What's the word for inflation in real estate?
You said appreciation yesterday, Brian.
Oh, way to steal my thunder. Say that I've recycled content. That's good. Yeah, that's right, though. It's appreciation. It's appreciation. So in real estate, inflation's a good thing. It just means we've got a tangible asset that's just going to go up in value. Thanks, Apple. That is true. And that's it. That's what it is. It's appreciation. So that's going to drive those prices up more and more. The more trillions the government prints, the higher housing prices go. It increases buyer demand. And Lord knows we got a problem with supply. In fact, we're probably going to have a housing crisis pretty soon. Like the government's going to start building houses because we don't have enough roofs to put our people in. Because Lord knows we can make babies like anybody. Make sense? Okay? All right. So that's our housing inventory for the years 2000, 2020. As you know, housing inventory is the key determinant to look at when we're looking at housing prices. That balanced 6 months is the difference between a seller's market and a buyer's market. I don't even remember what a buyer's market feels like, okay? So there's that one. I'm going to show you one more that I want you to see that kind of brings it all together. This is my favorite graph, okay? This is my favorite graph. So this one actually talks about the annual appreciation of home prices. These would be great things to put in a buyer consultation packet or a listing consultation packet, or your virtual packet, or whatever you do when you meet people on Zoom nowadays, newfangled real estate practices. And this is by year from 2001 all the way out to a projection of 2021 taken from National Association and the Mortgage Bankers Association projections out here, okay? And you can see the annual appreciation of home prices. How much did houses on average across the United States of America go up in value each year? And you can see very, very quickly that, you know, through that terrible housing recession, which is the worst of all time since the Great Depression, so the worst in 100 years, I mean, it's really not that much. We made it back, you know, by 2013 as a country. Okay. So again, if you buy a house and you can hang on to it just for a few years, you're pretty safe unless we see something absolutely historic. But you can see housing prices have been increasing, you know, at an average rate over this period of 7.6. And then from 2016 to 2020, we were just about at 6%. Until last year, we jumped 9% because supply just dropped too low. And this year, supply is dropping even lower. We're talking about 10%. Yalis, how many houses did you flip last year?
We bought a total of 74 units and we flipped about 43 of them, Brian.
You held quite a few.
Yes, sir.
That's where the smart money's at, isn't it?
Yes, sir. I love holding property. Yeah.
Yeah, that's right. And mind you, he also sold 184 units last year, which is pretty cool. And understand, so rather than flipping properties, it might be a good idea to go out and buy 100 properties right now and sit and wait for a year. Sell them all and you're going to make 10% on average per one. Make sense? You don't have to pay closing costs. You don't have to pay your commission. Pretty darn easy. So with that said, that's a lot of what big flippers do in this market. That's a dice roll. So long as they cash flow, who cares? You can, cash flow will take you right through all of this. See what I'm saying? If we're looking at making other income in real estate, because that's what we're seeing is prices jumping on average. Historically, we're typically talking about 4% on average. And that's only because of years like that knocking the average down. We went an average here from 2001 to 2006, the housing boom, of 8.3%. That was the average in that period of time. We're at 7.6 here. We went down to 5.8% on average, still going up fast. And now we're just hitting crazy town. Absolute crazy town. And I believe we're going to see a number like 13 or 14% in 2022, just because there's no way we can get enough supply on the market. Not a chance. Remember, everybody's worried about those deferments and those foreclosures? Remember that? Where are those at? Wouldn't it be cool to have those? Yalis would probably buy every one of them. I'm not worried about them sitting out there. I'm pretty sure we'd gobble those up kind of fast right now.
I am hoping for them, Brian.
I know. I'm pretty sure there'll be 30 offers on each of those. So not worried about prices going down. It's kind of funny. So yeah, it is pretty hilarious right now, but this is the map I'd show. I'd be showing home buyers right now, man, now's not the time to be picky, right? All you have to do is, if you feel like you overpaid by $5,000 or $25,000 or whatever, just wait a month. You're going to pass it. Make sense? So these three kind of culminate together and help you demonstrate. I would be including these in a listing presentation. I'd be including these in a buyer presentation. I'd be showing these to investors. Like, why on earth are you waiting? You know what I mean? Are you waiting for your taxes to see how much you have to pay for your taxes? Boy, that's expensive. You know what I'm saying? That's expensive. I'd be going because, man, prices are jumping now at a rate of about 1% a month. That's almost 1% a month right there. You're paying more. If it's one of Andrew's like $700,000 deals, that's 1% of that's pricey.
Yeah, it's over here. You should look at the inventory here. It's crazy.
Oh, it's really low. I do look at it. I live there too. So yeah, it's nuts, man. It is nuts. Thank God I own something over there.